And so like, how do you build that relationship, and how does it unfold? And I know like my partner Marcy loves, as part of when she's meeting with founders, she always goes on a walk with them multiple times, like while we're recording. And I know there's something about walking next to somebody and not necessarily looking right across the table and looking forward together as you're walking, like that brings some of this like together. And I just think it's I love that she does that. I think that's really cool.
Brad Felt is the one who opened my eyes to that. You know, he's like running around Boulder doing these walking meetings. And so I started doing it in San Francisco, and like, you know, let's meet here, let's get a coffee, let's walk along the canal, let's walk along the Embarcadero. Hello, and welcome to Fireside with the VC. My name is Andrew Romans, and today we are with Mark Terbeek, who is a partner at Greycroft, the famous venture fund founded by the beloved Alan Patricoft. Mark began his career after Stanford MBA, I think, at McKinsey, and then joined MK Capital in Chicago, who I've known for a long time, spent a little over a decade there, and has hit that magic 12 plus years at Greycroft, which is a great time to see the 10-year term and the extra 2 and really have some wisdom, not just how things start, but how things end. And this is very relevant for the topic we're going to focus on today, which is a lot of entrepreneurs and founders and VCs talk about product market fit. They talk about founder market fit, like this founder was born to disrupt that business. What we don't speak a lot about is founder investor fit. So I'll kind of hand things over to Mark. But Mark, thanks for joining us and great to see you.
Yeah, and Andrew, thank you for having me. I'm really excited to be here. And this is a topic near and dear to my heart. So fired up to jump in.
Yeah, I mean, first of all, this is just so true for anyone out there listening. If you don't have like 25 years of experience like Mark, you will learn things the hard way. I've raised over 300 million of VC funding, so I've clashed with other people. Believe it or not, there's some people that don't love me out there, and I've had people on the board. I've been blown away at like competence and incompetence with board members. And so, you know, maybe Mark, you know, and we will get into Greycroft and go through the usual boring stuff, but I wanted to go straight into the fun stuff. So Mark, you know, even what has changed? I mean, over, you know, going in from, I guess you kind of got going in 93. That was like Mosaic days. So it was just like so exciting, right? But tell me you know, how long was the founder married to the VC when you started your venture career, and then bring us up to today?
Yeah, I actually, I joined the venture business the first time when I left McKinsey in 95. It was May of 95.
Oh, 95.
I think Netscape went public in September of 95. So it was kind of like the first, you know, real emergence of the commercial internet as we know it. So it was a pretty lucky time to have gotten into
But you were McKinsey in 93, right? So
yeah, I was at McKinsey 93 to 95. And then I joined a small investment bank in Chicago called First Analysis. It was started by a guy who, Oliver Nicklin, was an awesome guy who was the former CIO of William Blair. And he had he had started a kind of a long only sell-side investment research firm that also had a series of venture funds in the areas that their public analysts covered. So it's very fundamentalist, you know, kind of research-oriented investor. And then there were 2 focused partners in the venture business. They hired me as their associate, and that was in 95. It was just a lucky time to get in there. And I mean, deals looked very different. I mean, we were probably the only firm in Chicago at the time. Almost everything was in Silicon Valley, of course, and then Boston were like the 2 big kind of corridors.
The Pritzkers were kind of always doing something now. And Adams Street, maybe that was a bit later stage.
There were, and even they were like a little bit more buyout-y and like a little bit later focused. There were very, very few like early stage investors. So, and most of the companies were in the Valley or on the East Coast, but primarily in Boston. Even New York and LA were not like big secondary venture markets. No, they're huge.
Absolutely.
Obviously, but at the time,
Boston was way bigger than New York in those days.
Yeah. Oh yeah.
Sure. That's where like Winter Street.
Yeah. And so the deals when they got started were, you know, like Series A deals were like pre-seed deals today. You know, and, you know, but this idea that founders coming forward and choosing investors to partner with. I mean, there were fewer options. It was a much smaller industry back then. But this idea that, you were really going to pick a partner to be with you for a long time. Now, these companies used to go public a lot smaller, earlier, quicker, than they do today. So in some ways, this issue's gotten even more pronounced, I think.
Well, hell
There
yeah.
would be a
That
rotation
was
of
kind of my
shareholders
weighted
often.
question for you was that
Yeah.
the duration of the founder-investor marriage back then. I think MySpace launched the website and 6 months later actually got acquired by Rupert Murdoch.
Yeah, I think that's right.
So
I think
that's
even,
an LA story too, by the
acquisitions
way.
were more often the exit. Of course there were public companies, and certainly I think with the internet emergence, once Netscape went public and that rush was off, we saw the pace pick up, the investment dollars picked up, and really the duration of a Series A to a public company could be 5-7 years, could be shorter in certain instances. So the decision to partner was one that, while important, maybe the duration was shorter. Now, as we know, these best companies are staying private for 10, 15 years, maybe never will go public. So that decision for a founder of who to work with, what to look for in an investor, how to align against your values and their values. And, these are like professional marriages. And in some ways, they're almost harder to get out of than a actual marriage.
That's what I tell people all the time. I'm
So-
like, it's like, you can divorce your spouse, but good luck divorcing your co-GP
Yeah.
in a fund that is, because of what you've described, is going to go for more than 10 years, right?
Yeah.
And it can be difficult to decouple yourself from your board member.
Yeah, I mean, there's statutory rights in many cases for not only that they have rights to be on your cap table once they've invested, and there's certain preferred rights they typically have. They might have management letters and other things, but often they also have a right to a board seat or an observer seat. And those are very difficult they're usually like unilateral rights, and you need them to kind of waive doing it. And so it's very challenging if you wind up with a firm or even an individual at a firm who,
That's right.
doesn't see eye to eye with you. And even that's not terrible. But if you have a relationship that breaks down where you're not even really able to communicate well with each other, it can be really toxic and very frustrating when you're building. And there's many ways to avoid that, which we can get into and talk about.
Yeah. I mean, just to, put a stamp on how important this is. Not only is there governance, I mean, I think a lot of people do this simple math saying 2 seats for the founding CEO and the co-founder, 2 seats for the money, the VCs, and 1 mutually agreed to. And the founders manage to get their huge mentor in there. So they say, we've got control of the board of directors, even though I hate this arrogant Stanford MBA person, I feel that I have control of the board. But along with those preferred, the shareholder rights include stuff like blocking rights on to a
next round of capital.
So they could stop you from fundraising and force you to raise money to sell because they want to put points on the board, returning LP capital ahead of them raising their next fund. So there could be a massive conflict of interest between the founder and these board members. And even though you've got control of your board with your mutually agreed to, you're 3-1 in a majority, they might be able to block you from raising, and they might be able to block you from selling because they want to deploy more of their mega fund into it. So there's a lot of things that can go wrong, even if you feel that you've got control of the majority voting rights of, of the board.
And that's exactly right. And I think, if you were to ask a repeat founder, and this would also include a first-time founder after their journey's over and they're, reflecting back with objectivity, almost every one of them would say they wish they knew now what they do now, right? When in the beginning, right? Because how you approach who you want to work with, and even when you go through a process and you've met with multiple investors, and let's say you're in a fortunate position where you have multiple offers, how do you evaluate not just the monetary terms? Of course, that's important when you're evaluating your different potential offers of who to partner with, but importantly, the non-monetary terms, like who are these people? What's the reputation of the firm? What's the reputation of the individual? How do they work with founders? Not just in good situations, but how do they manage through the tough situations where things don't go kind of as was envisioned, which is almost every case. Sometimes
Which
better,
is,
sometimes worse, right? But like,
Yeah.
we all know like the number of things that go up and down even every day within a startup, right? So you kind of look at that whole spectrum and you say, how do I evaluate objectively the best path for me? And what I always tell founders, and I was a founder too. I started a software company after graduate school and went through many of these decisions and the challenges and the ups and downs and stuff. I always tell people, like, at the very least, it needs to be the same level of scrutiny and effort that you put into hiring a direct hire. If you're a founder and you're going to go hire a head of sales or a head of engineering or head of product or whatever it is that you're bringing in, you're going to do many interviews. You're going to run a process. You might even be getting some advice from trusted friends, confidants, other advisors, whatever. And then you're going to do a bunch of reference calls, both ones that you reach out to that they give you, but a lot of back channel references. The best ones are talk to other founders who worked with these guys. Right. Because like that's where you'll learn
references.
What it's really like. Yeah. And that's almost never done because the process is, most founders like to build and they want to get back to building. And they also often in a process at the end, the investors are pressuring them many times with exploding offers to move forward quickly because they don't want you to do that.
Right.
Because they want to win the deal and they want to be done. Right. And so that's the tension.
I mean, a real key thing here, how to get this right with founder investor fit is to even professionally manage your fundraising process. It's like if you wanted to get a job in investment banking and you get an offer from JP Morgan, you probably want to have an offer from Goldman and Morgan Stanley at the same time, compare the three and make the best decision. If you get that exploding offer because, you married the first person you met in the disco, as opposed to allow enough time to go by and run a professional process. So running a professional process is probably one way of like beginning to do it. I often tell people when you're in that fortunate position of choosing, kind of evaluate the reputation of the firm. I mean, Greycroft, of course, is fantastic. And evaluate the reputation of the founder, but then the chemistry. I said founder, I meant to say partner.
Yeah, the investor. Yeah.
What is the chemistry between you, the founder, and that venture capitalist? And it's more than just vision, And then the third thing is, what are the terms of the deal, and how does that position for the next financing? So this is not like your final financing looking to max out, valuation. So I guess your advice on how to do that is, do on-sheet and off-sheet reference checks and talk to people. And, one thing is that a lot of VCs will, fund their winners and then, stop funding the ones that are struggling. And if you do a reference check on that one, they might hate me. Like they're like, hey, that guy didn't fund me. He didn't participate in the pay to play. And, you can get some bad feedback there. So it's something to think about. But still, doing some research is a good idea.
Yeah, and I would say like even on that aspect, because that happens, right? Like where, maybe they pivot or they struggle in the beginning and then, it's an area that's of less interest or whatever. Like it still comes down to being like, fundamentally like open and transparent and honest, right? With founders, right? And if that situation does end up happening, if you're really on it, it's what I think founders really mostly don't like is lack of transparency.
Yeah.
They don't know
the worst.
And for whatever reason, the investor, either because they don't want to be honest or maybe because their own situation, the firm doesn't allow them to have an answer that is concrete. That's what is frustrating to a founder more than anything, right? Because if they know where they stand, then they can figure out how to move forward. And so, like, it's really starts with that. But I would say, like, for what I think about and what I try to counsel founders on, certainly ones that we're working with, but even ones that we're not first, is like, what are you really looking for in a partner, right? And that usually starts with your culture of the firm. Like, what are you trying to build? What matters to you on this journey that you're going on and that you're trying to build, right? and what kind of partners do you want to be helpful? Do you want someone that's really going to dig in and kind of roll up their sleeves and really try to help? Maybe they have a certain perspective because of their background. Maybe they're really strong in sales and marketing. Maybe they have a deep product and engineering background. That could be a real unlock for you. Maybe they're just incredible networker, and like opening up customer relationships and other things like that is important. Yeah, but like, what is it that you feel like you're missing from a skill set standpoint, but also like an alignment around your cultural fit, and then focus on that, because that's the stuff that like I would say most repeat founders that have gone through this already, and I bet would say, hey, I would take a slight trade-off on valuation or other terms if I got someone that was really aligned and that I knew was going to have a really great productive relationship with me through the good and the challenging times, right? Meaning you're going to be direct, you're going to show up, you're going to be always thinking about what's best for the company, not for the investor and their position only, right? Like, right. Particularly when you go on a board, right? You have a fiduciary responsibility to all of the shareholders, not just like when I invest at Greycroft. This is not just what our position is for everybody, right? All the shareholders. And I think founders need to really think hard about that, because when you have that dynamic on your board, everything gets easier. And we can come back to the board dynamics, because I have many thoughts about that too.
Yeah. I mean, my father once said to me, if you don't like someone, they can probably feel it. And so if you think you're fooling that person, that, she still thinks you like them, they probably can feel that. And that's an issue. I interviewed Bob Pavey from Morgenthaler about him leading the Series B into Apple Computer way back in the day. Yeah. And he said that he just hated this guy, Steve Jobs. He was barefoot, smelled, didn't shower, just insanely prickly person, no social skills, but he really believed in the personal computer was going to be a big deal, and this company had momentum. And he said, I did the investment despite absolutely hating, Steve Jobs. Sometimes I've met founders that I thought were kind of a bit of a prickly Steve Jobs, and they're some of the biggest names you've ever heard of. Now, what are your thoughts, from the venture investor or the founder of saying, this is going to be tough going, but they fill in a missing bit here, or we have long-term alignment. What are your thoughts on that? I mean, do you have to want to go sailing for 2 weeks on a small boat with everybody?
That's a great question. I think about that all the time when we're investing. Of course, it's awesome when you do have chemistry and you feel like it. But like, I look back at my career and the different types of founders that I believe now, when I look back, that I worked with very successfully, they have very different profiles. I think they share some fundamental characters, issue, or like elements that I believe I have and our firm has. And I think that's a fundamental one you can't get over. Like, and I know they're going to sound kind of soft, but it's like, do you trust them? Like, there's an honesty level, because so much of our business, as you know, is based on trust, right? Like, almost everything really is. And so as long as like I feel like those elements, I usually feel like, I can then understand, hey, if they're a bit introverted and maybe a bit quirky in a way that is different, like, that can be okay. I can evolve. I don't have to change my character, but I can change how I show up with that founder to maybe we communicate a bit more over email or whatever, because they're a little more comfortable in that manner than just having like a hashed out, like kind of more direct, like, let's get to the bottom of this, right? And some of my founders are very much like that. Like, they want the debate. They want, it's like sport, right? Yeah. And so I think the difference in personalities, I think, can be pretty easy. But at the end of the day, like, I feel like my job as a director, once I invest in a company, is to really understand like what the plan is that they're shooting for, and to kind of make sure we're aligned on what that is. And then it's really to like look at them as the star quarterback and like knock obstacles out of the way for them so that they can go win, right? And what I don't want to do is be like have them think of the board meeting every quarter or every time we talk, like, oh crap, like I've got to go meet with these guys. It's like, it's a waste of time. Like I want them to be like, this is a chance for me to like bring ideas and concerns that I have about the business and transparently and openly share that and hopefully get some perspective where I leave that meeting with better energy than I got there.
Yeah, I think like just like any relationship, whether it's family or spouse or your portfolio CEO or VC board member, is communication.
Yeah.
And it's much better to. It could be a lonely place to be the founding CEO.
Super lonely.
And you're like, do I tell all the employees that I've at the rate we're burning cash and I'm getting rejected by every VC? Down rounds, I could lose my job. They have a lot of lonely concerns. If they do have this good communication relationship with a board member, they can say, I'm a little scared of these other VCs that we've let into the room, but I trust you. You seem to have my back. You're diversified. Even if this thing fails, you're building your reputation. If you as a VC have a reputation for being bad to the CEO, you're kind of committing suicide yourself.
100%,
and they have a lot more choice than they did in Chicago back in 1995.
Look, this is like the ultimate repeat game, right? Business, right? And ultimately, for me, like, and I think as at Greycroft, I mean, our goal when we partner with founders is really to view that relationship as hopefully we earn the right to be their most important or one of their most important calls that they make, right? Whenever, and I always laugh, like I'll be in my car driving somewhere and I see like all my phone starts ringing and I see down it's one of my founders. And I always get this sense of like adrenaline because I have no idea if it's going to be good news or bad news or what it is, but I just get fired up because I know they're calling me because they're going to share something that is important to them. And presumably, sometimes it's just great news and it's exciting and they know that I'll care and be excited. But a lot of times they're going to have a question or a concern or something. And like you said, it's a lonely business. There's not many people they feel like they can call. And this is where I feel like our job's kind of like half psychologist, half bartender. Right?
Yeah.
And you're basically just trying to like listen and understand and make them have time to contemplate and know it's a safe place for them to find space to wrestle with this question to wrestle with. And I never feel like I have the answer really almost ever to something they're asking about. In fact, I want to like not even condition myself to think that way. What I want to do is actually help ask a couple good questions for them to reach clarity on what they are thinking. They know their business way better than I will or any investor is going to.
Yeah,
right? And so my job isn't to tell them the answer. My job is hopefully to ask them a couple of really good questions that provoke them into reaching a level of clarity for now they know how to answer the problem.
Yeah. One of the things I liked in what you said in there in the middle of that was having enough time. So, for example, what is bad is you're in your car, your portfolio founder calls you and says, hey, good news, we have a new head of sales. You're like, oh, what happened to the last one? A better one is to get a call saying, hey, Mark, my intuition is spooking me that I was a little, coercively management style on my head of sales. And, if they walk out for a falafel, there's so many funded companies here in San Francisco, I might lose the head of sales. I'm a little worried about it. So like getting that advance call of before the head of sales walks and takes half the sales team with you and crushes your numbers going into an M&A or an IPO or a fundraising or just trying to get profitable, whatever. It's much better to get that call early than not be in a communicative, relationship. Whenever I get in my car, I say, "Who am I going to call? Who am I going to call?"
Yeah,
even like my parents.
100%.
And you live in LA, so I mean, if I get you on the phone,
relationship with the founder is reaching what I consider to be a very productive, like hopefully a very constructive relationship. And again, we're not going to be like always best friends. But like it's a relationship where they have the confidence to be very transparent, right? There's no and non-defensive. Right. Yes. And my job is to also present myself and to show up as many times as I possibly can in a way where I create an environment where they feel like they can share that information with me. And I'm not going to immediately judge that, right? I'm going to listen. I'm going to ask some questions and like try to help, get them a framework of how to think through the process and who else could they talk to. And like we've all been in a meeting where like, the one person, whether they're on the board or not, who just has all the answers and just starts firing. Well, I had this one company and I know this is always the case. It's every company is a snowflake. They're all unique. Right. Yeah. And so I find the best boards are ones that create an environment for that constructive discussion, but do it with an urgency where they're encouraging, forward momentum, but not at an unnatural level that gets to a bad outcome.
Okay. And with all of your experience and all the board seats you've been on, all the boards you've been on, how do you feel about mending a relationship that's getting toxic?
Awesome question.
I'm sure you've been through this.
Awesome question. I've seen it on some companies where, I've been involved from the early days, and probably even in some relationships that I've had with founders. And I can talk about a few of the instances that I think where I felt like I needed to step up and do more. But also in circumstances, and this happens all the time because of the duration of these relationships, 10, 15 years, where I've had a number of times where, maybe an investment that we made as a firm, even at Greycroft, where someone else had led the investment originally, and that person left for whatever reason. And then, I ended up being, and this has happened across not just me, but other partners, but in this case, since we're talking, where I ended up taking over that relationship. And, you have a chance to kind of reset with the founder and how do you rebuild that relationship? So again, it comes back to communication and trust. And I always feel like, and again, I'm not perfect. I'm not trying to convince anybody that I'm like the ultimate board member. But what I always try to feel like is if we can get our relationship to that level where people see that there's trust between us and that we're being really honest, and I'm not holding back on what I think, but I'm presenting my thoughts very respectfully, and I'm also not in an ultimatum where I'm like, I know the answer, this is what to, then other people see that and then they feel like, hey, that's a good way to get through it. I'll give you one example for me, like one of the things I do. Like I always try to be as honest as I can be, right? I grew up in Chicago, as we talked about before. That's a Midwestern kid by growing up. But like what I do is like, if I have something that is concerning me, I will raise it with them, and it's usually done one-on-one, not like in the board meeting. Now,
right.
If something just kind of spontaneously comes up and I feel like I owe them some honesty, I will suggest or raise a concern. But I feel like I owe them that to call them and say, listen, I know this might not be exactly the answer, but I've seen enough to know that like TR burn rate may be a little bit higher or whatever it is. Is there a framework or a process of which you could relook at that in a way to ensure yourself that you feel, whatever. And I feel like that's how you build trust, because then they're like, okay, he's not throwing me under the bus. He's actually going to, and then I'm consistent. Then I'm on the board meeting later and that topic's coming up, I can explain, hey, I gave you a call. We talked about this already because I saw this, and that now you're giving them time so that by the time the board meeting comes, they can say, yes, we did talk about this, and here's the thinking I did, and I'm going to walk you through my initial thoughts or whatever. So they're prepared, and you're like collaborating, not like trying to zing them like in the meeting, right? And at least that can be how it is felt sometimes, right?
I mean, it's easy,
not constructive.
It's easy to forget this, but when the first time I raised venture capital funding as a founder myself, I was so young that I just assumed they wanted to bring in their former MBA roommate to be the CEO to IPO this company. Yeah. And there's no way little Andrew was going to be the IPO CEO here. So there was a little paranoia. So I think it's important to build this trust where they feel like you're a junior co-founder and you're on their side. And I kind of try to say, look, man, I'm diversified. If this thing fails, I'm not going to break a sweat. I will go all the way with you and back you on your next one. So just be as honest as possible. The worst is when they're like Elizabeth Holmes hiding information or providing the raw, because then it's like, what am I going to do now?
Yeah. And I mean, look, those, obviously there are some high profile versions of that, but like, that's what I'm saying. Like that, like I feel like when founders are super transparent, they raise the challenges early and they're harder on themselves on the things that aren't going well. Like that builds a lot of confidence. As a someone who's there to try to help them, right, in the company. I mean, I have the same interest, right? I'm trying to accomplish the same thing that they do, which is to kind of build value for the business, and so like I like that lack of transparency, the hide the football kind of stuff is a big warning sign. Like that's usually when like I need to work to rebuild this relationship or help them know it's okay to share more and to be a bit more vulnerable. Right?
By the way, with all my experience, when you say I'm from the Midwest, so you know what that means. I just want to clarify, like you and I, we both invested in Crafty. I don't know if you were involved in Crafty.
It was one of my other teammates, but yeah.
One of your other teams, right?
Great Chicago company.
I haven't seen your name on it, but like we were in there before Greycroft, and these guys actually were at McKinsey when they came up with the idea for the company. Yeah. So they're McKinsey guys like you. They're in Chicago. They're from Chicago. But I find founders of the Midwest are a bit more, here's the truth. And my little weird theory is that it's so expensive to live in New York City, and it's so expensive to live in San Francisco, and LA used to be cheaper, but it looks kind of expensive to me. That they're just like terrified of running out of cash. Where like these Midwestern people are like, look, if I have to, I'll live in the goddamn lake house, you know. And so I'm just going to tell you the truth. But they definitely seem a little bit more honest than a little less shell game Elizabeth Holmes elements in that part of our country. But good people are everywhere. Good people are everywhere.
True.
Yeah, and so on final thoughts of like, how do you feel about developing a relationship with the founder over a period of time, so that by the time that they're getting to the stage that they're a fit with Greycroft and you guys?
This is a great question. So let me take it on two levels. So when I always feel like, and again, I believe this is our strength as Greycroft, and we care deeply about this issue. That's kind of really what the firm was built upon. But each of us have our own style, right? But it's something that we share deeply as a firm. But when we're meeting a founder, if we've already worked with them, we're in this incredible position where they know this about us already, and that's probably why they've come back and they're talking to us, right? If we're meeting with a founder that has not worked with Greycroft, or at least directly, like our job is to help them understand as we're doing diligence on the company and understanding the business and what they're looking for. It's to parallel and importantly, like at the same time, build a relationship with the founder so that they understand not just how we work, but what it feels like to work with us. And so that as they're making their decision on who to go with, in many cases, these guys have 5 or 10 different options that they can pursue. I want them to pick the best option for them. Hopefully they align with us and they believe that what we're putting forward is awesome and that it resonates with them and they like that. But at the end of the day, I really just want them to pick the best fit for them and what they're trying to do. But there's obviously, as you know, there's many great investors and many great firms. And so really that's what I'm hoping for them every time, is that they pick the best person. And our job is to make sure we put our best foot forward so they know that. So that's kind of like the courting process. If they haven't worked with us, is kind of that, right? Yeah. And then I think the Greycroft marketing challenge is to make sure that anyone that hasn't worked with us kind of knows what the people that have worked with us feel, right? Like that's kind of, and then after the fact, right? Like after we've started working with a founder, it does take some time, like it does with a friendship or any professional relationship that you develop, or even personal relationship. It can unfold over time. Hopefully there's some chemistry and there's a connection early, but you learn layers and like you go through challenges. And as you know, in entrepreneurship, the first punch in the face comes very quickly after, often even before you get to the first board meeting, right? Yeah. And so like how do you build that relationship and how does it unfold? And I know like my partner Marcy loves, as part of when she's meeting with founders, she always goes on a walk with them multiple times, like while we're recording. And I know there's something about walking next to somebody and not necessarily looking right across the table and looking forward together as you're walking, like that brings some of this like together. I just think it's a great, I love that she does that. I think that's really cool.
Brad Felt is the one who opened my eyes to that. He's like running around Boulder doing these walking meetings, and so I started doing it in San Francisco. And like, let's meet here, let's get a coffee, let's walk along the canal, let's walk along the Embarcadero, and it's almost like you're falling in love in a natural way. I mean,
and you kind of vibe and you see what it's like to work with, and after 2, 3, 4 years, what I love is like when I see the intentionality of a founder who does, let's say we got involved pretty early, like let's say the A round, right? And then I watch how they then go through the process at the next round, right? Of course, they have their own perspective and they've been developing relationships. They'll often ask us, hey, who else is awesome that you think would be a great fit with us too? Like not just as a great firm, but an individual and like with our value system and how we're building our company, right? And then I watch how they intentionally build each round and how they evolve the board and even the outsiders that they bring in to complement that. And you see how intentional the really good boards are. And then we've been involved in a number of companies, obviously, that have great boards. And then it's just so powerful to feel and to see that versus one that's just didn't get to as good of a place, may even be a bit dysfunctional. Yeah. The founder doesn't even really like coming to the board meetings. Like they all go virtual. They're not even in person anymore. Like you just see it and you can feel the difference. And I always feel bad because the board can be a real strategic unlock if it's used, effectively. And I feel like founders deserve to have that. And I think the next time they build a company, they will be way more intentional about it than the first. And I just feel like our job is to all help them, nail this and also not be. And one of the things that we do at Greycroft is like, we don't view ourselves as, even if we have the right to a board seat, we make a commitment to founders that if there's someone better that can take our seat, we'll do it. And that can be either like another investor potentially around the table, or if there's an outsider, if the company, because I mean, these businesses evolve so much over 10 or 15 years. What might have been right for Mark at the Series A to be the perfect guy, by the time they've raised 3 more rounds and they're now 500 million in revenue and they're trying to do the skill set they might need might be different. And like, we don't care. Like we want them to just be as successful as it can be. We can still continue to help in whatever way makes sense to the company. And we hope we have a relationship that is so transparent, open, and so functional that they can approach us and say, we love you guys, but we think we could use this. Are you open to that? We would be like, great, let's go help you recruit that person.
Yeah. And what do you think about, a lot of the accelerators seem to have been taking founders through their founder school where they tend to not put, stress on finding the firm and the partner and the chemistry and the economics. And they're just saying, forget all that, just go on the economics.
Yeah, it's an interesting, I understand on one hand kind of why that is, right? Because I think one is speed. You want to build, especially the very early pre-seed round or whatever, you're still looking for product market fit. That's such a founder driven part of the model. I feel like at that stage, I understand on one hand, like that you want to just move quickly, get a deal done. In many cases, you're not even like allocating a board seat for that initial capital. And so like there's part of me understands what they're doing. That said, though, those early decisions can start to change and inform how the market's going to react to your next round. If there's like a well-known bigger fund that's in there, even as a seed investor,
or even individuals, like if you've got you've got the head of Sandhill Angels as someone that invested in your seed round. I mean, I remember YC used to have handshake and commit. Like you used to be able to sit in the audience and say, I'm in, and they might accept your money, and you have no idea that you've got Al Qaeda and ISIS on your cap table, and Greycroft doesn't want to be on a cap table with ISIS and Al Qaeda. So I think it's important for them to evolve a little bit on this issue.
And I understand the speed dynamic and the fact that they juggle, particularly like YC has such an incredible history and network and so many people, like the juggling. But at the same time, I think my only advice to the founder would be still be intentional, right? Still make sure that you're vibing with these people, particularly when you're going to pick like someone that's really leading the round as opposed to it being a little bit more of a party round. And especially when you're going to start forming a board and having people joining your board, you really need to be thoughtful and careful about that,
Yeah.
because it's so hard to fix and switch that after the fact.
It's very
And
hard.
everybody people have different, requirements with their LPs. They have different ego requirements. They have different dynamics within the firm of where they are. This is going to be the deal that's going to get me promoted. There's all these things happening that are not always obvious to a founder. So you just need to be really thoughtful and do your work, do your research, do references, talk to like other investors that have worked with this firm, talk to definitely other founders. And you'll get the answer.
When you're getting diluted, it should be viewed like I'm getting diluted by this co-founder. Everybody you bring onto your cap table is dilution, and they should be adding value and bringing them into the orbit of the company. And listen, I know you got to bounce, but final question.
Yeah.
We're living in another thing that changed that kind of annoys me is you see a company raising 15 million on a safe, and like that back in our early days, that should have been a priced round. What the hell? That when you see safes and convertible notes being almost abused. That when it should be a priced round and issuing stock. And when there's issuing stock, there's normally the governance side of board seats and stuff. What do you think about bringing in board seats, even if it's a safer note these days?
Yeah, I mean, like I look at them as exactly the way you're describing. One is kind of just like an economic construct that describes like what your investment is worth or not. Like maybe that's unpriced, right, or whatever. And then the second is kind of governance, right? And like for me again, like as a founder myself, but also an investor who's backed and worked with many great founders, my advice is kind of that governance side of when you start building your board. It's important because you want to have a culture as a firm that is accountable and that reads out, even if you control all of the decisions, all the stock, all the voting, all the board seats, right? You still want to have a level of accountability to yourself and your shareholders, of course, right, that you're going to deliver and that you're going to hold yourself up and explain if it's not working, why it's not working. Again, this is different than governance that you could be thrown out of your role as the CEO or whatever. I'm not talking about like there's a level of accountability that you want to drive in the business because you're going to hold other people that work for you accountable. So you have to hold yourself accountable. And so I find if you can construct a board that can do that, even if the founder controls the board, and it's still a mechanism to use the board meetings and the board discussion as a way to improve the business rather than just have it be a readout and like this necessary evil that I have to show up to 4 times a year, but it's a waste of my time and I just want to go back and build. That's your fault. If you feel that way, you haven't built it right.
Yeah. I was lucky to have Chuck Newell, co-founder of NEA, on the pod, and he was, on Hamburger Hill Warrior in Vietnam, and he said that startups is the closest thing to combat that he's ever seen. He lost half his men on Hamburger Hill in one day. He knows what he's saying. I actually enjoy the combat, of like the startups that are like my bottom 10% that are going through problems. Working through that energizes me. I enjoy that. So I think that every startup gets hit with many torpedoes. What you're talking about here today is the difference between total success and self-actualization, or you got a base hit, it could have been a home run, or total explosion. But
yeah, and I think you want to look back at the end of your journey and feel like, it was great, right? Like independent of the financial outcome, that you learned, you had a supportive system, like you grew as a person and like you had people there that were backing you and being honest with you, like, and like that, because I mean, like, yes, there's a financial outcome that's of course really important to the founders and us as fiduciaries, but there's a sense of like, I just put 10 or 15 years of my life into this thing, and you want to like feel like, it didn't suck. Like the day-to-day and the interactions that you had, that the relationships were toxic. Like you want it to be great and enriching, and you want to feel like these people are going to still be your friends and colleagues, independent of what you do after that.
Well, Mark, those are great closing words, Mark. So thank you so much, and look forward to seeing you next
really,
time we're in
thanks for
Santa
your
Monica.
time. I enjoyed it.
Bye for now. Thank you so much.
Talk to you soon.
Bye-bye.